All right, today is February 28th, last day of the month. And we're looking at EU, Euro, US dollar. Right now, we've got the 1 hour higher time frame outlook on my screen. We will be going down to the lower time frame outlook, which is my 1 minute charts and lower than that. Um, no live trading for me. Haven't done any live trading now all week, and won't be live trading all this week either. I've got other things going on in life that prevents me from being at the screen during my regular session hours. So this video is going to be a recap, not a recap, sorry, a hindsight sort of trading opportunities, I guess you could say, and let's get to it. So first things first, I want to show you guys on the buy side of things what's going on here, right? So this is, again, reiterate it, this is the 1 hour chart. And on the 1 hour chart, we've got this buy primary that got put in, right? Buy primary is what? It's a range that goes over the top of another one that's already broken structure and added liquidity below it. I've done a bunch of videos on this now, so if you have no idea what I'm talking about, best to go back through and watch something I've recorded before, because there's a really good chance that I'll be talking about buy primaries and sell primaries. Suffice it to say, the range that comes and takes liquidity and then breaks on itself and then breaks out the major structure becomes that primary range. And so we've got this primary range here that was fairly obvious. And if you look between the A leg, the B leg, and the C leg, here's the A, here's the B, and here's the C leg, right? So A leg was the start, B leg was the bottom of that, and the C leg was where it broke on itself, okay? So if we look between that B and the C leg, which is like what happened after it was formed, so you could say that this leg here, A to B, is the formation. What happened between the B and the C? Well, there's only really one thing that happened. It initiated aggressively away, but they left, and again, 1 hour chart, but they left this range right here. They created this little range right here, and it's not little at all, it's big, it's 1 hour, and then they initiated away. So realistically, everything else is really not of no interest to me except for what happens in here and below it without breaking structure. So I'm interested here. I mean, only two places. Number one here, and number two below it. Okay, everything above it here in this sort of open space here, I'm not really too worried about. I obviously understand transitionals, and transitionals are where when we break through something like this, heavy price action, range, we initiate and then we initiate through it. What it means is it's going to have to mitigate out of it eventually or at a later date. And they do this on purpose. It's just how the markets are delivered, and it's something we see over and over and over and over and over again. So we would expect that this area here, rather loosely, will translate to a lot of price action. We just pull this over. What do I mean by price action? I just mean price transacting in this area for an equal or more than amount of time than this. So you can see here we had this period of time here. Don't know how long that is, but you could say a day, or maybe a few days. What is it? Okay, so from the 4th all the way to the 5th. So let's just say 2 days of activity in there, right? 2 days of activity. They come down, mitigate something, pop back up, don't break structure. Very obvious sign that we're going to be working our way through it. Also, what is this? This isn't a mitigation of anything. It's a transitional order block. And so this is always going to become liquidity. So I write transitional order block. Yes, I fully expect it to get run. I expect these highs to hold. I actually expected this high to hold, not any of these other ones. It didn't really matter. And then they initiate away. And so as they're initiating away and down into this area again, they're just transacting in here, right? What are we doing? We're mitigating in and out of this block in a different format. That's really all it is. But they're spending time at that level of price. So that's what's going on, right? So that's on the buy side. Now, if we just zip to the sell side too, we need to talk about this also. So as I look out, zoom out, we've got this higher time frame range that took the liquidity from this range. So we paused here, ranged, They initiated, they broke structure. So this is valid. They put liquidity above it. This range in here comes up, takes liquidity from above that range, and initiates away. It breaks on itself, and it breaks other major structure. Now, for me, this isn't major structure. Okay, so this is why I've got this here. Higher time frame, sell primary has not been activated because it only gets activated when we break major structure down here. And because we haven't broken structure, it tells me that we will be coming back and to mitigate in and out of this one, first of all. But it shows us that really there's an initiation sequence going on and they're pushing price down because they are trying to activate it. They're trying to make this a solid range. And if you look between this higher time frame sort of outlook, you can see that this would become, in a higher time frame look, if this is going to become a sell primary, this would become that range that they create in the middle, right? In the middle of the primary. So as you can see here, here's that sell primary, and we've got that range in the middle. Well, here's it doing it on the higher time frame. I mean, we're talking like monthly chart really, or weekly, maybe you can see this one on. But it's created this, and we fully expect it to break structure down below. All right? That's what it looks like anyway. So that's what's going on the buy side, right? We've identified a buy primary with a very interesting range, range of interest. Look what happens at the range of interest. We've identified this sell primary, right, on the right hand side of the screen that has not been activated. However, we're going to zoom in. Let's just clean that up. This guy right here has been activated. Okay, and let's talk about that. And I think actually, has this one been? No, this one still hasn't been activated. Okay. So we've got this higher time frame sell primary that's being put in. And as they initiate away, we get this range here. And so the last known range. So this is going to be the range that we're going to be most interested in when it's activated. Okay. It's not activated yet, so we're not too interested in it, but we are interested in it. We've got it drawn on our charts. And before price even breaks structure and closes on itself for the primary range, we get this range initiation, break of structure. They come in and they put in a completely valid sell primary. Why do they do that? Well, I believe it's because this is not activated and they know that it has to activate down below, right? We have to get this activation down here. And so what they're actually doing is creating, right? Creating a new sell primary within the sell primary to hold it, to hold price. And so that's why this high here is very important. Okay, this will become liquidity for surezies in the future. Excuse me, guys. Let me just turn off my notifications. There we go. So I do believe this will become liquidity, just not yet. Okay. But we're initiating away. Sell primary forms, and we're initiating away. This range in here comes back after the activation of this primary range and comes straight back up to the range where you'd expect a reaction and a follow through. It then becomes liquidity, and they go range initiation, break of structure, and then this bigger high time frame range here comes in, takes liquidity from above this one right here, and pulls down, breaks on itself, but again, not activated. So this is going to be another important range once we activate. You know, these are going to be reactive ranges, like the ones that as soon as, the buy side of things is kicking in again, these ones are going to be for liquidity purposes. They'll want to come up into these ranges, mitigate in and out of them, and either go higher prices or lower prices. But we'll be waiting on either side. But suffice to say, that is what's going on. Now, bear with me, guys, because this is getting a little tricky to keep up with, but it's important. So remember, this is 1 hour. We still haven't even gone down to our lower time frame. So we've got this unactivated sell primary that has broken on itself. And inside of that, right, so as we're delivering away, okay, we've got the A leg, we got the B leg, and the C leg is right here. So what happened between the B and the C leg? That's what's important to us. And so we have to identify the range that we think will be the last known, most recent range that sort of held price in that range. And what I mean by that is the range that goes up from the very to the very highest point within that range. Okay, so let me draw it to sort of help understand, right? So as we're initiating away, they usually create something like this, okay? This would be the A leg, this would be the B leg, the break-in structure, and so this would be the C leg, right? And so usually they create a range, just like this one. But this time they did something different. This time they did this. They came up, actually it came up like that. Then they come down, they made a small primary range in it like that, pulls down, does some other stuff, and then you get this kind of wacky looking bar. It comes up like this, and I'm talking about this guy right here, and they initiate away after that. And so this range in here, right? This range here took all the liquidity and it comes up to be the range that was at the highest point before breaking this structure, right? So it didn't break this structure, so it just held. And so this now becomes a sell primary, right? Because it took the liquidity within that range, as long as we've got the break-in structures, you know? And so you could conclude that, I don't know, this is the break-in structure. You could conclude that this is the break-in structure. Either way, it doesn't really matter. It doesn't have to be a primary range. It doesn't have to be a primary at all. But it has to be the last known range, right? And as far as like not breaking structure at the top. So hopefully that explanation works for you and you understand it. So this is a range of interest to me, right? I've got it drawn on. It's the range of interest, most interest to me. Price does what? Comes up to it and reacts. What happened on this side as well, the buy side? Price comes up to that last known range and what? Reacts. So we've got these last known ranges that are reacting. Now, yes, I know this is not activated, right? And so even though price is pulling down, this is still an area of interest for me because this is pretty much activated, you know? This one right here is 100% activated, right? This little guy in here. And so even though it hasn't been activated, we're still able to play off of it because we can see intention, we can see what's going on, and it's like activating inside of itself. So what I mean by that is a sell primary is formed within a sell primary. Okay? And it's that part there that is really giving me weight to think that we can play off of these. So this is what I want to look at, and this is what I want to look at, right? This is what I want to trade. This is how I want to trade. I want to trade off of the higher time frame points of interest. We understand the ranges that we're most likely to get reactions from, and we want to just trade from these types of ranges. So what do we want to see as price enters up here, right? Price is zipping up. What do we want to see? We want to see a lower time frame sell primary. If we can get a lower time frame sell primary, we're in. What do we want to see on this side? Well, as price comes down into this range, we want to see a lower time frame buy primary. If we can see a buy primary, then we're in. We can trade it, right? We can go for it. And why do we want to see those things? It's because as price is coming down into here, if we get a sign, a signal that we are creating something or they're adding to their book long or short, whichever one it is, but if we get a signal saying that they're going to go long or short, we want to know about it, and getting that signal right in the right area of interest is vital. So let's move to our lower time frames and move forward. Okay, so here's our lower time frame outlook. And remember, I didn't take any of these trades, okay? So I'm going to talk about 2 trades, but I did not take them. These are just hindsight. This is what I wish, wishful thinking, I guess you could say, but this is what I'm kind of looking to create, to do when I get to the charts in my session, right? And if price is coming up into these areas of interest. So I want to talk about this one trade that I was able to identify, right, that I think is a banger. And let's go, right? So price is coming up. It's coming up into my gray box, hasn't tapped that gray box. And then as price does come up into it, and we can get rid of this because it hasn't formed yet, we get this, the tap and a mitigation of something. So we have no clue, right? We have no clue if you're going to be the mitigation or not, right? We just know that you're inside that range of interest. And so the first thing we're doing is we're trying to identify any kind of any kind of ranges that might be of interest to us. And so I've identified this one right here as an insight bar, right? Range, initiation, breaker structure. And what that does is adds money up top, adds liquidity. Okay, because anytime you break structure, what do you do? If you were short in here and you break structure, what do? You move your stop, right? That's the first thing you do. So immediately you get taken out, right? It's just it's just liquidity concepts. It's just how they move markets and how the market makers do things. Oftentimes we think they're out to just get us and they're searching for our stop losses. Yes, they are searching for our stop losses in the sense because that's just again the way liquidity works. But it's not personal. It's not personal going after you specifically. Oh, you've just entered here, and so oh no, the price isn't giving you that 10R. Instead, it's giving you just a reaction, and a pull away or something like that. It's just how they deliver price over and over again. Don't take it personally if they get you out. It's just how they do it. But you can learn it, right? And that's the benefit of things. And so as soon as I see this range here with a breaker structure, I'm looking for price to come up and over it. And so before price does come up and over it, I'm also going to be looking for reasons for us to sort of get an entry, really. Okay, because what we know is that if this is a liquidity stack, right, with a break-in structure, then there's a chance that we're going to come up over it, right, and then initiate away. And what that will mean is that will become a sell primary. So that'll be absolutely ideal, right? And isn't that the best place that you want to enter on? You want to enter into a sell primary, number one. And number two, you want to enter in a sell primary that's being formed right at the top. And if you can get into those ones and be successful at it, then you're in a really good state, in a really good place. So we can see that range, initiation, breaker structure, all of this here, you see how we mitigate and then push down, taking more liquidity. What this is doing, I believe, is mitigating in and out of this range. So we've mitigated out of the range for what reason? To stack more liquidity in this area. Think about it. These are almost equal highs. And what that is doing is just pushing money into this area, which is why do they want to do it? Because they're about to take the money and go initiate away. So here we are on our 15 seconds, right? So we've got this range, got the liquidity up above, and then we've had that initiation in as they've mitigated out of it. Couldn't break structure down to the bottom here, and so they initiate prices more again. Then just the event just before the liquidity take, and we're going to need to zoom in for this one. So let's get nice and big. Let's put this over here too. So you can see, if I move that out of the way, you can see the liquidity grab, right? It did take liquidity. So we can see that liquidity grab has occurred, right? Now, before we go, oh, got the right color on and everything. Boom. Okay, so we know that we expect them to bring price up over the top of it, right? We've mitigated out and we're just watching to see what happens. Very, 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 very important part of this is if we are going to initiate away after having taken the liquidity from here, then we're going to do what I call the initiation pattern, which is what? Take liquidity from in this way, the buy side liquidity, and then take liquidity away from the sell side, right? The sells, and then initiate prices in the direction we want to go. Why do they want to do that? Because they want to take liquidity in either side to fuel all the movement they need. We'll take liquidity here, we'll take liquidity here, thank you very much. And what that's done is it's added more liquidity down here immediately. So the whole thing is a liquidity stacking event when they do it. But this is just a beautiful trade setup, and this happens just so many times over and over and over again. Remember, high time frame mitigation, pull away from that higher time frame zone. You could look at that as well. Look at the mitigation, what it is. It's likely a sell primary, all right, a lower time frame sell primary. I haven't even looked into this one, but maybe we should in just a moment. But I would say that it adds more weight if that is a lower time frame sell primary or a higher time frame one, right? If that's higher time frame, it's even better. So over here we come. We've got this liquidity stacked right here. They take the money, they initiate up. And I've been talking about this a lot in the last few weeks. This is my what I call an initiation in it. Right? This is my initiation modal. And what I'm looking for is take the liquidity from one side, take the liquidity from the other side. If this is going to become a sell primary, number one, we're going to be breaking on here. Number two, there's going to be an absolutely unwillingness to transact in and around this area, this sort of slipstream area that is sort of no man's land. It's the gap, the mauve/purple box is the gap, represents the gap between the buy primary and the sell primary. Okay, that's what it does. And so this range ticks all the boxes, right? If you actually look at this, this one right here, range, right? Range, initiate, breaks of structure, adds liquidity to the bottom, right? Price comes down, takes the liquidity, initiates, breaks on itself, and in order for it to activate, it needs to break some sort of major structure. It doesn't have that intention behind it anyway. And then in that same breath, we form a sell primary, the primary that came up and over this range here. This is a nice, decent range with a break of structure, stacked liquidity. And so there's this slipstream. And so let's clean up the chart. Okay, so the slipstream is what we play, because it's showing us the unwillingness, right? So here's that unwillingness to transact in and around here. Break of structure as well as just icing on the cake. And so they pull away, they break structure, icing on the cake. They come up, where do they come to? Bam, right? The slipstream. They mitigate out of it. That's your entry, zippity doo dah, all the way home. Now, if we were playing futures market, we can get stops pretty much like that, right? And that is exactly what I'm planning on doing. I will be moving over to, or at least testing out, some futures markets. I've noticed a lot of correlation between the S&P 500 and between the EU, Euro, US dollar. And so it's for that reason, coupled with the futures aspect of it, where I can get my stops tight and I don't get spreaded out, right? That's why I'm considering moving over to the futures market, and we'll be testing it out and whatnot. So while I do love Forex and I've been trading on EU for the last 4+ years, I will be considering the move due to spread, because the spread is just getting ridiculous at the level I'm playing at, right? I'm on a 15-second chart, and the spreads are just ridiculous. You know, I keep getting spreaded out over and over again on winning trades. And after a while, you have to sort of think to yourself, it's getting ridiculous. You know, I'm in the USA, and it's just we don't have these low spread brokers and ECN brokers that you do in Europe and the UK, and the brokers in the Europe and UK won't even work with us. So, what's my option? You know, keep getting spreaded, keep fat, fat entries, give yourself just bigger entries and stuff, maybe. So there's options. I'm not saying for sure, but check the entry out. Absolutely gorgeous. Initiates away. All right. I'm not going to talk about anything more along here. This stop here, you might have been thinking, well, what the hell? Why did price stop like that? And I believe it was because it was a sell primary range. The sell primary could have been drawn like from this point, but it also can be drawn from this point. The reason it can be drawn from this point is because if you go A to B and measure the range, you can see that the price actually comes below 50%, meaning that range has completed. And so this range is the range, if you want to know, if you call it that, right? The sell primary range, because of that 50% return on the first leg. But on a high time frame, it looks like this. So if we were to zoom out to say a 5 minute or more, maybe it would look, like that one, the first one with the first leg down here. So there's that trade. Again, didn't take it. So don't think I took that one. Don't be like, oh my god, he's amazing. He can take all these trades. So I am amazing. I do take amazing trades, but that isn't one of them. Now, same logic. Okay, on the buy side, let's go back to the buy side drawings, right? So this is a higher time frame buy side drawings. Remember the sell primary. Remember, I'm not interested in this kind of stuff here because it just isn't mitigating anything. This is where we're interested. This meat and potatoes, this blue box, and so I've got that blue box drawn out over here. And so here's what happens on the 1 minute. Now this was Friday. Now a blessing in disguise was that I wasn't available for trading on Friday, because it could have been ugly. I'm not gonna lie. Like, look at all this. It's just a very rangy day. And during my peak hours, my absolute best hours, 6 a.m. right here, I would have been at the screens at 7 o'clock, and I would not have been happy to have been ranged all day long and not gotten any action. Maybe I would have been able to get some 5 hours. You never know. I doubt it. I doubt it, honestly, because this looks very complex and it's something that I would have been waiting for something more to have happened. So I'd have had to sit through all this and not really getting anything. So here's what we're looking for, right? We're looking for range, initiation, breaker structure. Range, initiation, breaker structure. Okay? So I identify that range and put my dollar sign below it. Do it all over again, right? Here's a range. Where's the breaking structure up here? Is that the breaking structure? Not really. Not happy with that. I would want this breaking structure. So if that did break, great. But it's still still a tricky one to. It's not easy to identify, right? This one, like, where's the high, where's the low exactly? So I wouldn't be like loving on this range. This range ticks all the boxes as what we're looking for. This range is okay. Range initiation didn't get the breaking structure. And as we sort of look on, it's 11 a.m. now. Range initiation. What is this? The breaking structure just stacks liquidity down here, and then by the time you could even price comes below it, it's or did it even come below? Yeah, maybe by the time it comes below, it's like 2 p.m. almost on Friday. Absolutely no trading whatsoever, for sure, for sure, for sure. So this is just noise, right? This is just not in a bad way noise. It's just a range, a complex range but it's noisy. And there weren't any trades in here because we just didn't get a range. We didn't get a buy primary form. Is really what I'm trying to say here. We're looking for a buy primary to form. Now, so that occurs, and then we create the liquidity down here, right? Excuse the crude drawing. And then we're looking for a buy primary to form, right? And so what did we just talk about? Just literally just a few moments ago. Range initiation breaker structure, right? Look for the cells here. We'll just say this whole thing was the range, which it was. Range, initiation, break of structure. What does that do? It puts money up there, right? Range, initiation, break of structure. That stacks liquidity. This range here comes up and takes that liquidity, mitigates this block here. And at that same time, we initiate down, prices go down below this range that we had identified earlier with that breaking structure, right? And then we get the limbo again. We get the limbo, the slipstream. I like that name, slipstream. Maybe we can call this the slipstream. And we get into the slipstream. Let's just clean that up. Let's tidy that up and not worry about too much about that range, because it's really this activity of location which I wanted to show, and an entry modal of how we can get into those, right? So let's say you miss this, and we'll go back on the cells maybe and go, well, let's say you missed this, but suffice it to say, range initiation, break structure, liquidity stacks, right? They come up, they create a sell primary that initiates, breaks on itself, and is about to break major structure, right? Now, in my eyes, this is a break on major structure. And I have seen this happen a few times, okay? This is still very valid. So we've got a sell primary that's been put in that's about to get turned into a buy primary. Now that sell primary that's about to get turned into a buy primary does get turned into this buy primary by taking the liquidity here, pushing down, takes the liquidity, see what it mitigates, bet it's a buy primary of sorts, lower time frame, and then it initiates away. It shows that unwillingness to transact in the slipstream, right? The difference between the sell primary and the buy primary is the slipstream, and we're looking for that break of structure. There's that break of structure right here. Here's the slipstream. Here's that break in structure again. And so as price is showing that unwillingness to want to be in here by breaking structure and moving away from it, right? So if you were continuation shorts, why do we have to come back and grab liquidity straight away? If you're wanting to sort of dip into lower prices, you just range initiation, mitigation, continuation. You don't need to keep taking liquidity because you're searching for liquidity in different areas, right? You're initiating lower prices. So if that is the case, that's what we would expect. So for them to create a sell primary and then this buy primary is in, we wouldn't need to keep moving up, right? It would be more like, no, the sell primary doesn't need to get mitigated right now. Why would it need to get mitigated immediately? You know, it's a lower time frame sell primary. It's just logical. It's just logical that we should be a primary gets formed and then we either create a new primary that connects, not taking liquidity from the actual primary range, but on the way out, the leg on the way out, right? That makes sense, but not to take it straight away as we're initiating away and have just formed one, unless again we're making a connector. But anyway, slipstream ticks all the boxes. Higher time frame point of interest, that large blue box. Taking liquidity. Friday was all liquidity bound. It was all just literally just making the liquidity. So it makes sense actually, like when we say speak it aloud now, that on that evening on Sunday, I guess it was Sunday evening, that they would actually take all the liquidity that was created on Friday and initiate initiate high prices, which is what they did. So in the slipstream, all you would do is wait for that break of structure, have that unwillingness, and then you've got this trade idea. Now, I don't trade with 6 pip stops ever, but that's the trade idea, and it doesn't really matter if you do or don't, because look, go for a 10R. Remember, this is higher time frame. So if you're right, and this is the higher time frame buy primary that's been created, you can shoot for the moon pretty much, like, because your trade is going to be in the best location possible, right at the very bottom, and you should just be initiating higher prices. That's really what they should be doing if that's their intention, which it was. So and here's the trade that potentially would have taken. Let's say that's a trade idea at least. I probably wouldn't have taken that trade, but then you can start to see and build upon it and understand based on the lower time frames buy primaries now what's going on. So here's a lower time frame buy primary. Here's another lower time frame buy primary. And what's holding these is those middle ranges every single time. The last known range to have formed in the primary, and you can see that quite clearly here. Here's a buy primary that formed. Here's the range, right, that we expected. It's the last known range. I call it the last known range within the A to B to B to C leg. And then they do it all over again. Here's another lower time frame buy primary. Here's the stacking of liquidity, range initiation. There's the break of structure, comes back over the top and initiates away. But right at the bottom of this range, before it initiates away, it does a little range, right? And this little range is the last known range. And what happens? Boom, price touches it and zips off, up and away. Then a new buy primaries form. So you can see how you could enter, is all I'm saying. Like, we could easily see how we could be getting in these locations. Maybe a 2 pip stop would have been better on this one, but very, very logical, very logical way of doing things. So here's another one. Here's that entry there you could have taken. Here's this entry you could have taken. And as well, you could also this would have been the best one right here. This would have been the best one because you can cover the low. You can cover the stop there as well, the low of the range, which is absolutely the best. Whereas this one, you'd really want to be entering there with covering the bottom of the range. So a 5 pip stop again. So even though they work out, it's like that's a deep stop. So I'm not super interested in that. All right, that's it for today. that's how you can sort of work your way into the entries if you don't get the main one at the bottom. We were going to look at the sell side briefly just to see how we would get in on this one. So this was a fast and furious one. So as you get it up here, look, excuse me, as we get it up here, we're looking for the same thing again. And you could potentially argue that this is that range initiation. Here's a breaking structure, very weak structure, but we could be looking at that, and they take the liquidity from this would become like a buy primary looking into, and this becomes a sell primary. But you have to understand where the mitigation point is on this one. This is mitigating the sell primary, right? And so that's okay. It is transitional and it is liquidity, and they will take liquidity from up above there, but it's okay for right now to play off of it as price is there and initiating away, because it's a transitional, but because it's a sell primary that's been mitigated, it's a weighted mitigation, and so we can actually play off of it. So yeah, we initiate away. Potentially there was a trade here, right? So in fact would it have been most likely here? Was it here? Yeah, it's tricky. This one's tricky, but buy primary into a sell primary, you've got the slipstream. Where's the breaking structure? You're on a 15-second chart already, so maybe there was a lower time frame entry somewhere up here. But I'm not seeing it. And then as we initiate lower prices away again, we've got this mitigation right here, which I believe is this. Right, and this is actually a really good mitigation to have, because it shows you what's higher time frame, what the hell's going on. Here's that sell primary, and as we break through it, what do they want to do? They want to come back and mitigate the open of it. And so that is a very important mitigation. Yeah, it's definitely liquidity, But to have a sell primary mitigation, the higher time frame one to be mitigated, that's really good. Really good signs for the shorts. And so then it's just about a matter of just finding a sell primary and playing off of it. Okay, lower time frame sell primary and playing off of it. In fact, I think I can see one here. So here's the range. They initiate break structure, so you get stacking above it. Boom, price zips up, breaks on itself, breaks out the structure. So this would have been a playable primary, just like that. And lo and behold, where did they bring price to before initiating away? They took it into a deep mitigation. Deep mitigation, because this was the last known range that I believe was here, which was visible. And so for them to zip up above it, but it means a deep mitigation, which means only one thing: fast and furious. That means that they're going to react out of it, most likely, very aggressively. And on this one, this was just mitigation, right? So this is just mitigation. This is not entry. This isn't entry modal. This is just about the mitigation, because there was no real like pull down before that one. So now you've got the mitigation. Now you can start to look for your entry modal, and all you're looking for is a sweeping of liquidity on the down, right? We want to see them take liquidity from this side and then take liquidity from that side, and that's it. That's all you need. And I'm not gonna lie, this one looks a little tricky. As I'm just looking at it right now, I'm not seeing an entry that I may or may not have taken. Let's just spend just 1 second having a little look. This would have been the only kind of thing that took liquidity there. Here it is. Here's the entry. Here's where you would have gotten in. And this is likely to be a reaction too, because I think this is the last known sell primary. You have to go a little zoomed in on this one to be able to get it. Yeah. So that's the range that they would have been playing. So would have been for it's tricky. I mean, this is subjective, definitely. But there's, say, for example, your buy primary that turns into your sell primary where they take the liquidity from above there. And so you may, if you could, if you could have sort of seen this, this would have been here's your slipstream, and this would have been your entry. So as you're initiating away, you're waiting for what? Break of structure right here. There was no retest. So no entry as far as like the slipstream, but at the break of structure, even if you played it like here, you could play probably the whole range on that's 1.5 pip stop right there. So you could play this whole entire sell prime area. And let's see, would you have gotten it? No. So you wouldn't have gotten it. You wouldn't have gotten 10R just yet. Anyway, it might stop here and pull down, but it's unlikely, right? So anyway, there we go. That's my like I said, I didn't take these trades at all. But it is hindsight day or hindsight week. Not trading at all this week. Excuse me for yawning. Excuse me. Do beg your pardon. That's all. That's all she wrote. I hope everyone's smashing it. I hope you're enjoying these videos. Hope there's something of benefit here. I'm literally showing you how I would want to enter into these trades at this buy primary and this sell primary, or these last known ranges, I should say. But yeah, that's how I would do it, and rather successfully, I've been doing some of it. So we're just trying to compound onto that and get better and better and better. Aloha, peace out, love to anybody listening, watching. Wish you the most success in the world. All right, take care. See you on the next one.